Yeah, so just a minute.
You can just go to the top and you can click the slideshow. Next to next. Yeah, it is quite visible now.
Yeah. So
I think you have to make it slideshow actually.
okay.
You did. Now it is.
Now, am
Yeah.
I audible, sir?
Yeah, very much, very much.
Yeah, okay. So, friends, welcome you one more time, one more Saturday, and we have a different faculty every time. So, we are running a master class on a SEBI LODR. Today is a third part, and the topic for the discussion is the constitutions and the role of board committee. Friends, this regulatory architect under the Companies Act and LODR, the places a lot of responsibilities on the independent directors for the implementation of the corporate governance in the company. The statistics shows that more than 75% of the listed company in India are the promoters driven. And those independent directors are being appointed by the promoters only. The regulator like MCA, SEBI expect independent directors to play a key role for the safeguarding the interest of the minority shareholders. And and today's time, the independent directors are loaded with the plethoras of responsibility on various committees of boards, such as the audit committee, NRC committee, and there are many other committees also. Even all those related party transactions are placed before the audit committee has to be only approved by the independent directors only. Now, even the independent directors are also responsible for the compliance of the PIT regulations and also for those SDD maintenance and etc. and etc. So what I'm trying to convey, the liability of the independent directors has gone manifold. And of course, the company runs through committees, and it is mandatorily required that you need to have a committees, particularly for a listed companies and a companies of a certain categories. So to discuss in detail, today we have a two speaker, and let me introduce them. So yeah, our panelists, of course, Mr. Bala, Sonali, and Hema Kumari. And just to give you their background, so Hema, to begin with, Hema Kumari, she's a fellow member of the Institute of Company Secretaries of India and a law graduate. And she also holds the bachelor degree. She has almost 2 decades of experience in the listed companies. And currently she works for a company called a DEN network company as a company secretary and the compliance officer. And she has worked she was associated with the JK group of companies in the past. And of course, has also worked with the India groups and the Runta irrigations. Our next panelist is Sonali Sanas, and she is not new face in our platform, and also she is a regular speaker at ICSI. She's a Wharton alumni, and she has done her postgraduate in financial management, and also a law graduate, and of course a member of our institute. And she has also done her PMQ in a corporate governance. See, very few people has done this PMQ course, even though ICSI has launched this, but the experience is not so great. And she's also a diploma in the general management from IIM Raipur. She has also more than 2 decades of experience. Presently, she is a chief legal officer, company secretary, and strategy of a Saurashtra Cement, one of the leading cement company in the industry and a listed company. She has worked in a Ispat group of company, which belongs to the Mittal group of companies as a vice president, corporate affairs and legal. And she was managing the corporate secretarial work of the Bhaskar group in the past, and she has worked with the Hathway group of companies also in the past. So yeah, of course, and Mr. Bala doesn't require uh, uh, any introduction. He is our regular panelist, and 4 decades of experience. I was also a student of his, so I've learned many things from him in ICSI CCGRT. So thank you, Mr. Bala, always being a part of our journey. Thank you, sir. And yeah, he's a regular contributing articles, and I can see WhatsApp every weekly, somewhere he's learning passions, doesn't stop. So he keeps on writing a lot of articles in for the various magazines. So thank you, Mr. Bala, being with us. So I'll say Mr. Bala to say some few words, and then probably we can start. Yeah.
Good morning to all of you. I have a great pleasure in welcoming you all on my own behalf and also on behalf of the Mehta and Mehta. And really, these programs are actually, I am looking forward every Saturday further, which is rather enhancing knowledge, keep in touch with the profession, interact with many of you, and learn many things in the process. And as Atul has put it, it is a series of seminar which we are conducting on the LODR regulations, and today being the third one. Having discussed the preliminary things and applications of the companies, general applications, etc. in the first series, and the second series we talked about the board composition, the responsibility of the director, other things, etc. Today we are moving to committee of the board. When we talk about the committee of the board, of course, the committee of the board is actually governed by the Companies Act as well as the LODR regulations also. But today, what we are going to talk, since our topic is restricted to LODR regulation, we won't be taking of the committee other than the LODR regulation specified mandatory committees, namely audit committee and the nomination and remuneration committee and the risk management committee, etc. Although other committees are also required to be constituted of the Companies Act, such as CSR committee under the NPSC, Asset Liability Management Committee, those things not forming a part of the thing. But coming to the committee, what are these committees? Committees is nothing but a subset of the board. It is, I can call it as a smaller board. Because the complexity of the business which is growing on with the globalizations which is happening today, and the way the economy is actually moving, market is actually bouncing back, etc. and other thing, and all the business is becoming very, very complexity. And the role and responsibility of the board is very immense. As Atul Mehta said in the beginning, most of the companies are promoter-driven company. People would like to appoint their known people rather than recruitment because they don't want to bring an outsider, unknown people, etc. and other thing and all. But all said and done, regulator would like to ensure, as we see the preamble of the SEBI Act, it says very clearly protection of the small shareholders and also protection of the small shareholders, small investors. That is what it is talking about. In general, it is the protection of the shareholder, particularly to the small shareholders. Because what happens is the regulators is very much interested to bring a very stringent regulation, thrust upon the non-executive director, especially independent directors, the more responsibility and be in the transparent manner, and minorities are safeguarded, and majority is not taking the advantage and exploit the minorities. That is the whole purpose. So that what happened, the board does not have much of the time to deliberate all the issues, but at the same time, all said and done, there are many people who are having a particular expertise. When it comes to the audit committee, financial literate people, when it comes to the risk management people, people who are well versed in analysis, the risk mitigation, etc., and other things and all. So what they do is they identify the expert people who can actually deliberate the matter in a smaller group and come out with the valuable advices to the board on the specific areas of the operations. That is the whole idea. With this, again, as we have been seeing in the last 2-3 decades, the corporate governance, which is actually coming in the forefront, especially after the Enron issue, and also the Big Five becoming the Big Four, and various regulatory things which has happened not only in India but also across the world. Now, what happens is that corporate governance is much more in the forefront. Everybody wants to excel in the corporate governance. Everybody wants to be a good corporate citizen as such. So, in the light of that, what is happening is that a lot of trust is thrown upon on the non-executive director and especially to the independent director. As Atul suggested, one of the example, the related party transactions are required to be approved only by the independent directors. So the whole idea is A, reviewing the conflict of the interest, B, looking the things at neutrally, and taking a better decision-making process put in place in the board, and work for majority of the shareholders, all the interests of the shareholders to the greater extent. That is the whole purpose is there. Of course, the board can appoint the people, but the thing is, regulator says if you are talking about the audit committee, who should be the chairman, what should be their quality, what is the literacy, especially in terms of the financial statement reading and understanding the financial statement. Not necessarily they need to be a CA or MBA, so long as they understand to interpret the financial ratio, financial statement, they can read, they can understand. That is what the requirement is there, as the regulator is actually saying. So committees definitely can deliberate on the smaller issue. They can come out with a solution. There are regulator wants committees actually to approve certain things and the committee to recommend certain things to the board. These are all the things there. And another thing is that today we have the two panelists who are having more than 2 decades of the experience, who are still with the industry, who are working, they are handling the day in, day out. You will come across between the two committees the overlapping things, especially when you are talking about the nomination remuneration committee, when you talk about the audit committee, there are responsibilities that cost on the same circuit for both the committees. The nomination remuneration committee is actually going to the recruitment, suitability, and the recommend, where the audit committee, certain things are required to be approval. There are overlapping there. They're likely to be, one committee is saying something, other committee does not agree for something. How do we tackle? These are all the practical issues which are actually going to come out. And although LODR regulation talks about various things, as Atul said in the beginning, especially the PAT regulation. PAT regulation is not part of the LODR regulation, but it is a separate regulation of the insider trading regulation, on which the lot of responsibility cost of the audit committee, also periodically monitoring, assessing, reporting, etc. And all those nitty-gritties are also there. So today our presenter, Alifya, who is one of the senior partners, is going to actually run the presentation. And we look forward to learn from both the panelists, their valuable experiences, their knowledges, their comments, etc. on the topic. And I look forward that. I request Sonali to say a few words on the topic before we start, and followed by Hema. Then we can run the presentation. Over to Sonali, please. Sonali, you may note now we are almost 99 people actually there in the beginning of the seminar. That shows the interest of the people. Hema, you can also take a note of it. Always we have around 140 to 150 people participate in the seminar. Of course, there are some few people, they think that this is an introductory section. They will join after introduction. That also happens. Okay, over to Sonali, please.
Thank you, Bala sir. It was a nice introduction, and you have set the stage right. So now coming to the committees, and my view on this before we go forward with Alifya would be that committees are in a listed entity and unlisted also. So unlisted entity committees are equally important as it is in the listed entity. Listed entity have certain additional responsibilities under LODR, but unlisted entities today also have the similar kind of roles and responsibilities, because it to some extent is responsible to certain stakeholders, not exactly the public at large, but we have other stakeholders, we have suppliers, we have vendors, we have the government, we have the lender, we have the funds which have invested in the private entities. So I just wanted to put that the procedures which are there in the LODR for listed entity can be vis-a-vis followed by unlisted entities too, in order to set the stage right for the corporate governance for the unlisted entities, and also for those who are looking for future listings. Further, coming to the remuneration committee, the stakeholder committee, the risk management committees, which are the core committees in a listed entity, and the audit committee, of course. These committees actually have most of the bunch of the independent directors. We will go through Alifya's presentation and as to how the quorum is there and what kind of independence is needed to be maintained by the directors in taking various decisions. But having said so, these independent directors play an integral role and the key role in the corporate governance of any listed entity. The independent directors, when a company anytime hires an independent director, they think that their role is just statutory compliance, but it is much, much more than that. It's just that the running of the organization in accordance with the framework as provided by SEBI is with the independent directors. Many decisions, as Mr. Atul Mehta also rightly pointed out, like the related party transactions can only be taken by the independent directors. So independent directors play a key role, and the selection of independent directors become as important as selection of the senior management in any organization. When we talk about the diversified experience, the experience which the independent directors needs to bring in the audit committee, financial literacy is important, but also financial literacy in perspective of the industry and the businesses become even more important. They have to actually use their own mindset and the business acumen and the tools which they have as directors for the purpose of assessing the financial statements of the organization. They are being guided by the company senior management, but independent directors' independence matters a lot while taking further decisions. So over to Hema and Alifya to take us forward on this.
Thank you, Sonali, Bala sir, and Atul sir. It was really a nice beginning to begin with the role of committees and mainly the role of the independent directors. Basically, as Sonali said, there are other committees also apart from the mandatory committees, which we are going to see through the presentation of Alifya today. And the main role of these committees are that the focused role has responsibility and the decision making on the focused area where more detailed discussion is required, which can be done by the expertise in the said area has been delegated to these committees. Coming to the role of audit committee, the audit committee has been entrusted with the responsibility of finance oversight of the financial reporting, financial statements, dealing with the internal and statutory auditors. Then apart from that, the committee has also been entrusted with the responsibility of whistle mechanism, any complaints received. Further, apart from the mandatory terms of reference which has been given in SEBI LODR, there are other references also which are company specific, which may be delegated to these committees. Coming to the role of nomination and remuneration committee, the nomination and remuneration committee is one of the gate of entry to the company's board and also to the senior management. So it also plays an important role in recruiting and nominating and recommending the right candidature who can add to the strategic goals of the company. Coming to the role of the risk management committee, now the role of risk management committee has emerged as a very crucial one, seeing the recent COVID and the geopolitical risk which we all are seeing in recent years. So the committee should be well equipped to identify and to take steps and recommend strategies to mitigate the risk. stakeholder relationship committee is also entrusted with the responsibility of seeing the interest of all the stakeholders attached with the company. And these committees give affirmation to the public as well as the board that yes, everything is on the right path, and details, roles and responsibilities we can see through the presentation of Alifya. And composition of these committees plays an important role. So hence, I think that's why the composition of committee has been given. The minimum requirement of the composition of committees has been given by the law to fulfill the requirement and responsibilities. So Alifya, over to you.
So before Alifya starts, let me recognize, the presence of Mr. Jambunathan, Pankuri Varange, Anand Kumashi, Hemendra Paliwal, our partners, and Pratmesh Tripathi. Thank you all, for supporting this. Yeah, Alifya, you can start.
Yes, sir. Thank you, sir. So good morning to all my professional colleagues. Mehta and Mehta brings you the masterclass on SEBI LODR-III, which is the constitution and role of the board committees. So SEBI LODR provides for the constitution of 3 important committees. The most important one Regulation 18 of SEBI LODR provides for the constitution of audit committee. So every listed entity shall have an independent audit committee with a minimum of 3 directors, whereby 2/3 of the members of the audit committee shall be independent directors. So here, this is very important part of the composition of the audit committee, where independent directors play an important role in the decision making of various transactions which the listed entity may enter into. So though the regulation provides for a minimum of 3 directors, a company, depending on its size and the scale of its operation, may require more number of independent directors in its audit committee, so that any important transactions are cleared without any hazards. Further, it provides that all members of the audit committee shall be financially literate, and at least 1 member shall have accounting or financial management expertise. So this is very important, as audit committee deals with mainly the financial transactions which an entity enters into. So the expertise of the members of the committee in the finance part is very important.
So, Sonali, see, this is very subjective, when you say literacy, financial literacy means what? Even a BCom graduate, he also comes from the commerce background. So
Right.
can you say that, he is also financially literate? Because, yeah, I don't know.
Yeah,
the law itself says actually explanation has been provided. If you go through there, she also puts it here actually, what is financially literate means. You see the slide itself, she has already put it there. It only says there is a ability of the people to read and understand the financial statements. That means they should be able to know what is actually there in the financial, what it represents, what is it, what are the ratios in terms of profitability, in terms of the earning ratios, in terms of the various concepts associated. Not necessarily they need to be, a typical chartered accountant or MBA or something other. It is not like that. In fact, I remember in a company called Vulcan Lowell, long time back, which has become Alpha Lowell Limited, there was actually a person who was actually the chief financial officer, who was only a matriculate those days. He occupied the position of the chief financial officer, the way he deliberated, he presented the things, etc. Even many of the qualified people, they were really taken a shock the way the interpretation and other things actually come from them. So that is what the ability to know the things, that is what it is mean financially literate. Not necessarily a particular qualification, if I understand. Other panelists, your views, please.
Yeah, Balaji, you're right that the law doesn't provide that they have to have any specific qualifications like a qualified professional like CA or CFA or something. But the point here is that if only a BCom graduate sits on a board of a listed entity has many subsidiaries or a turnover of say minimum say 2,000 to 5,000 crores, So he may or may not be able to give the real inputs. I understand from where you are coming from that they have been leaders in the industry and in the profession, which although they were not qualified enough, were providing the best insights, and even it holds today good. But the way the law is evolving in India and also internationally, more so when you are looking into the context of the subsidiaries overseas, they need to have some insights, and that is where the role of the Nomination Remuneration Committee actually comes into play, wherein they have to see that whenever an independent director is being appointed and is part of the audit committee, then that person should have something beyond the normal financial literacy, which is either he or she should carry the industry expertise or an expertise in particular field which has to do more with the technical skills which he can apply for the purpose of taking the right decision and sitting on the chair. Because the senior management is the management, and independent directors nowadays are totally a separate set of directors which are not actually part of the senior management per se. So there a balance is required to be maintained, and where the role of NRC and the board also comes into play in ascertaining that who would be the right person for the audit committee.
If I actually run a check with the people also here in the participants and also other people, who is the chairman of the audit committee or who are the members of the audit committee, I am sure you will get an answer. Many of the people will have the director or chairman of the audit committee, a qualified chartered accountant retiring from the leading what you call auditing firm, etc. and other thing. That is what it is in practice. Because having worked in the listed company almost about 20 years as a company secretary, even the company where I was working, I am talking about 20 years back actually, we also recruit the independent director, one of the senior partner of the Price Waterhouse who's retired. He was actually there on the audit committee as the chairman. Practically, that is what it is, really speaking.
True. And that creates a proper balance also between the management
and another thing,
the
as you rightly said, there are very few people in the industry who are non-qualified people who are having this sort of a thing. You can't expect at large you will get such people. That is also true. Conversely. Your view, Hema?
Yes, sir. I also endorse the same view, though law does not provide for any particular qualification. The only thing which the law has said is financially literate, but in most of the listed entities, it's the chartered accountants mainly who form or person with the background of having this financial expertise, which forms part of the audit committee, sir.
Correct. That is what it is in practice.
Hey, so tomorrow, if SEBI can come and say, look, you have appointed a BCom graduate or SSE, and he's been question mark about his ability to read financial statements.
Sir, in case that person is member of the audit committee, that means the nomination and remuneration committee must have gone through its background. Its experience, previous experience also matters. With simply become honors or like qualification, if that person has the expertise in the financial, then I think it's in order.
Right. So, Sonali, your views.
So, actually, when we talk about financial literacy, it is a word which can be interpreted on the left and the right, both the ways. When I go on the left side, what Hema is saying, it's absolutely right that a BCom graduate is also a financial literate. But when you go on the right side of the law, not the left side of the law, then the person should actually understand the financial in a way that which is little beyond than what a BCom graduate can do. Because when you read the financial statements of an industry vis-a-vis a qualified BCom graduate reading a financial statements, it's quite a sea difference. So basically, if I have to choose between a BCom graduate or an MBA, then definitely yes. As a remuneration committee, I would go with a person who is qualified at least like an MBA, if not chartered accountant.
Yes, so the role of NRC comes into picture.
Yeah. In fact, the companies which are having subsidiaries overseas, they are also trying to hire CPA now. CPA is also on their rolls, and CFA is qualified from US, just to ensure that globally all their subsidiaries are in the control of the holding company in India. So,
and not only
that
that,
is where they interpret financial literacy in view of their businesses. Actually, it is actually financial literacy in view of your business, how your business runs. If
not
you're
only that,
sorry.
the NRC committee has been given the very, responsibility to the independent director to go in the selection process and work out the skill matrix which is actually needed by the company and analyze and judge and then recommend. As Sonali puts it in the very beginning, what is the choice between the BCom and the MBA? They will go by the MBA. When the things comes to the NRC committee, they would like to choose the best people who suits to the industry rather than, going by the word, literacy, etc. and other thing. And all. That's what I think. And as I said in the practice also, if you look at any of the balance sheet of the company, listed company, which is available in the public domain, invariably, you will find actually a qualified MBA or qualified chartered accountant is only heading the audit committee. That you can always find it. That is there.
Okay, now we have a Minanti Das. Can you, Minanti Das? She has raised the hand. You wanted to ask some question, Minanti? You can unmute yourself and ask. It seems to be not there. Yeah, Alifya, you can continue. She can ask anytime. Yeah.
Before that, I just wanted to highlight that while deciding the composition of audit committee, also the limit of the committee membership which that person is having need also to be seen. Like there is a limit of 10 committees and chairmanship in 5 committees. So that also need to be seen by the listed entity.
Yeah, Alifya, you can continue.
Yes. Further, LODR provides that the chairperson of the audit committee shall be an independent director, and he shall also be present at the annual general meeting to answer the queries of the shareholders.
The moment you say chairperson shall be present, that means it is mandatorily, it is required. Genuinely, the chairperson fell sick, unforeseen circumstances. If he is unable to make it, what happens?
Board nominates an alternate chairperson who is a member of the audit committee.
Okay. So board has to actually nominate somebody else.
And to resolve at the meeting, actually. This is the standard corporate governance practice which people follow.
Okay.
Chairman of the audit committee, and it is quite natural. It is not necessary that chairman has to attend every time. But nowadays, we are experiencing in the last 4-5 years when you are having online AGMs, the chairman is generally able to present. But in the good old days, when it was not online, at that time the board used to resolve with proper quorum at the board meetings.
Yeah, you are actually right. In fact, long back, not now, earlier in some of the places, the audit committee chairman was actually not present, and the ROC has left and right taken the issues, and companies have been penalized. I think what you are saying now in the absence of the chairperson, I think probably later on somebody can be there after the board resolves, etc. Those things have come up later on, I think. That's a later development, I think. So, yeah.
Sir, while SEBI LODR does not give any carve out, but the Companies Act SS says that that can be authorized. Means any other member can be authorized as per the Companies Act.
Yeah, Companies Act, it is there, and I think the specific things are even the unforeseen circumstances happen, we'll have to go by that only. That's what I think. As Sonali puts it, yes, board can take a call, they can resolve the issue, and it can happen. That's what I think so. Any other view? Atul, what do you think? Because you have been dealing with many companies, you might have seen also the AGM.
Yeah, but I think I agree with Sonali what she said. When the the director presents, can always choose. Yeah.
Yeah, go ahead, Alifya.
Yes. Further, the company secretary acts as the secretary to the audit committee also. The invitees to the audit committee may be the finance director, head of the finance function, head of the internal audit department, a representative of the statutory auditor, and any other executives who are taking care of the finance data of the company. They can also be present at the meetings of the committee.
Totally, I want to ask you one small thing at this point. Whenever the invitees are actually called, generally invitees are called to address a specific subject, not for the entire agenda of the item.
Very true. Yeah.
Okay, because one or two subjects, they are actually invited. So in which case the invitee has been called only the appropriate time and they are present there, they leave the meeting.
That's very true and rightly put in, because audit committee goes into the details of the entire financial operations and also the business operations of the organization, more so in the context of the internal auditors when their scope has been specified by the audit committee, and they are not there to have a preview of the entire business operations of the organization, and their review is limited to the scope as is defined by audit committee. Then generally most of the listed entities have internal auditors only up to their report, and then they leave. Similar is the case with certain senior leadership which has come in to discuss the internal auditors report with the members and the chairperson.
In fact, I also remember even in our days also, when I was a company secretary, we used to call for the invitee. And we used to call only for the particular time. Once the things are over, we will ask him, okay, thank you very much, and they leave. Even we record the minutes also accordingly for this particular item. So-and-so invitee has actually joined and given this presentation, etc. and other things done. After the discussion is over, he left the meeting. We used to record that way.
Yes.
There is somebody is asking, can there be a permanent invitee to the board which regulation this emanate from? What the question is asked. I don't know about the regulation and other thing and all. We always used to have the permanent invitee or the chief financial officer present in the audit committee meeting when the things were discussed. And of course, in the board meeting, he used to be called for a particular item of the business only, not throughout the board meeting. That only the company secretary is there in all the meeting persons. Yeah, your view, please.
Agree with you. I agree with you that there can be permanent invitees, and CFO, as you rightly pointed out, is a permanent invitee. Some companies also have the CHRO, Chief Human Resource Officer, as an invitee, permanent invitee in the nomination remuneration committee and the board also, for the purpose of the senior leadership discussions and decisions to be taken. So these certain functional people do come as a permanent invitees in certain agendas which are fixed for certain meetings which are on regular basis.
Somebody is putting a question, can a chairperson of the audit committee address the queries of the shareholders when the chairman is actually addressing the meeting? See, normally in the general meeting, what happens is chairman conducts the meeting generally. And whenever the queries are raised and other things and all, what happens? Chairman answers. Otherwise, he requests the audit committee chairman to answer. That is the way it happens. If the queries is put specifically to the audit committee chairman, I think that will happen like that. It's all depends upon how the meeting is being conducted in practically.
And what protocol is set by the chairman for the
area? That is right. It is actually the chairman who set the things.
Yeah, Alifya.
Further, the regulation provides for the meetings of the audit committee. It provides that the audit committee shall meet at least 4 times in a year and not more than 120 days shall elapse between any 2 meetings. So usually at the end of the quarter, the audit committee meets to approve the unaudited quarterly results or the yearly audited results. But apart from them, that audit committee needs to meet a number of times as it has a wider role to look into, and it may audit committee approval may be needed for various transactions that may be undertaken by the company. Quorum. The quorum shall be either 2 members or 1/3 of the members of the audit committee, whichever is greater, with at least 2 independent directors. Here again, the composition of audit committee is very important, as 2 independent directors need to be always present whenever a meeting of the audit committee is being called.
somebody has actually put a question here. Is the general counsel entitled to attend the audit and the NRC meetings? The moment you put the entitlement of the attending the meeting is only on the directors who are the members of the board. So long as general counsel is not the members of the board, there is no question of any entitlement, etc. comes unless the board permits. Then only the general counsel can attend, because you cannot say this is my entitlement, because nobody can enter in the boardroom except the board members and of course the company secretary. He is invariably going to be there. He is the only person who is going to be present throughout all the meeting and committee meeting. Yeah. Sonali.
Further, the audit committee has the powers to investigate any activity which are in the terms of its reference, seek information from any employee, obtain outside legal or other professional advice, and secure attendance of outsiders with relevant expertise if it considers necessary. So again, the audit committee has the power to call for further expertise where it may need while approving a transaction.
So generally, to answer both the questions, like what is coming on the slide also, obtain outside legal or other professional advice. This is again need-based, decided by the committee whenever they want to seek an advice. In this, the role of the GC also comes in, General Counsel, that whenever they want to seek a professional advice, the audit committee or the NRC, then the chairman permits the GC to join the audit committee and the NRC meetings. So this is how they draw the powers, and this is how they permit the GCs to be part of the meetings. And generally in the NRC committees, I have seen that GCs are part of the NRC committee, but permitted by the chair. It is specifically mentioned that invitee permitted by the chair to attend the meeting.
Bala sir, you are on mute.
I also said, when the question is asking, is he entitled? There is no entitlement. It is only by the permission.
Not at all. No entitlement.
Yeah. It can be a permanent permission, it can be a need-based permission, it can be a restricted permission, whatever it is again subject to the permission from the board members, not the entitlement as such.
Yeah, so while they want to exercise their powers, if they need support, then they may permit them, but there is no entitlement to any position, except CS.
Yeah, that is right. Somebody is actually asking, is there a checklist for an independent director on the various committees, or is it too difficult to list down? One thing is there, whenever you talk about the committee, there is always a terms of reference has been well laid down for each of the committee, which is made available to the members. Members is very much aware of it, that is one. And the second thing is that every time the agenda is actually set out, it is sent. When the agenda is sent, all the documents relating to the agenda item is actually sent to the people for their study, etc. and other thing and all. So apart from that, they are entitled to ask any clarification, questions, etc. and other things. That's what I think so. Yeah, your view, please. Both the panelists, Sonali and
Yes,
Hema.
sir. Yes, sir. I agree with you. What you said. The terms of reference which govern the independent director who is part of that committee. Apart from that, only one thing in audit committee, the related party transactions can be approved by only the independent director. Rest terms of reference are same for all the directors in the said committee, sir.
Yeah, Alifya.
Part C of Schedule 2 of SEBI LODR regulation provides for the role of the audit committee. As we all are aware that audit committee has a very wide role in any organization. So the important roles are oversight of the financial reporting process and creditability of the financial statements, recommendation for the appointment, remuneration, and terms of appointment of the auditors of the entity. So here again, the expertise of audit committee is needed. Keeping in mind the size of the organization, whether the particular auditor who is being appointed is eligible, it has the proper infrastructure to cater to the size of the organization, and accordingly they decide on the auditors. Approval of payment of statutory auditors for any other services rendered by them. Reviewing the statement of uses and application of funds raised through any issue. So here again, whenever a company has a public issue or a preference issue, Then the audit committee reviews quarterly all the statement of uses and application of funds. Further, it also reviews the report that is submitted by the monitoring agency. Reviewing and monitoring the auditor's independence and performance and effectiveness of audit process. Again, this is very important role which an audit committee plays so that it takes into account the performance of the auditor, whether all the audit processes and audit trails are being properly followed by them. And there are no lapses in the audit. Any subsequent modification of transactions of listed entity with related parties. So again, the related party transactions approval, prior approval is needed as per regulation 23. So here an audit committee plays a very important role to approve the related party transactions which a listed entity is about to enter, and also any subsequent modification that may be taken in that related party transaction. Further, every half yearly, the listed entity is required to submit its related party transaction statement to the exchanges. So here again, it has to monitor the whatever transactions the company has entered into during the half year period and accordingly submit the statement to the exchanges. Scrutiny of intercorporate loans and investments. So the audit committee also looks into any loans which the company has given to other entities, and also the investments made by the entity, whether they are profitable, whether as per the business of the entity, the surplus funds are properly invested or not. So all this scrutiny is being done by the audit committee.
Somebody has actually put the question here relevant to this. Understand the scrutiny of the investment means the post facto review of the investment. Does it mean that prior to the investment, the audit committee does not need to approve the same?
So, as the role of the audit committee is concerned, intercorporate loans and investments, it's part of the overall roles and responsibility forming part under the financial statements of the audit committee. So intercorporate loans and investments, as a protocol, it goes in every time before the audit committee, then it travels to the board. Scrutiny of intercorporate loan and investment, an audit committee can only do once it has approved it. So the scrutiny can't be done till the time the approval is not there by the audit committee. So yes, the process under law, although it is not very clear in the LODR, but Companies Act do state that it has to be by the audit committee. When you refer to the terms of reference and compare under the Companies Act and LODR, intercorporate loans and investments approval comes under the audit committee's preview, and then followed by the scrutiny. Yeah. Scrutiny can be and post also, both here. It can't be just interpreted that the way it is mentioned, it is post.
See, my concern is, Sonali, it's like a full-time job, you know. If I have to, a company like yours, you know, with some 1,000 crore turnover, if I have to look through all those, you know, so I don't know, it's like a full-time job, Mr. Bala. I mean, you understand what I'm saying? You know, oversight, financial reporting process, recommendations, you know, all those, like it's like a, if somebody is to really give a justice to this function, you know, that person has to be full-time.
So,
yeah, Sonali.
What the companies generally do, they also constitute a finance committee in addition to the audit committee, which has a very minimum number of people because it's not a statutory committee. It has just internal board members, and that finance committee, audit committee, the board delegates to the finance committee, and finance committee then provides a proper reporting to the audit committee after scrutinizing it. So this, some companies like our company does this. So this is one of the ways of doing it. Yeah.
One more thing is asking is a reporting authority. Can the risk management committee report to the audit committee? Is the appointment of the chief risk officer mandatory? I think, in my opinion, the committees are actually subsect of the board.
Yeah.
So risk management committee cannot report to the audit committee. Risk management committee has to report to the board only. That is very clear actually. And second thing is, when it's come to the appointment of the chief risk officer, I think it's a regulation 30, if I'm not mistaken, that actually covers the things. Yes, Sonali, your views.
Chief Risk Officer appointment, yes, it is mandatory, but it is not necessary that company should create a separate position of a CRO, Chief Risk Officer. It can be an overlapping role with any of the senior leadership. Second, coming to the reporting of the Risk Management Committee to the Audit Committee, as Bala sir mentioned, yes, it is no. Risk Management Committee doesn't report to the Audit Committee, but the report of the steering committee of the company, which relates to the risk of the entire organization, also travels in parallel to the Audit Committee, along with the Risk Management Committee, because the Audit Committee has to also review the risk of the organization. So they also become equally responsible for reviewing the risk. But at the board level, both the reports, both the committees provide their views, and then the chairman deliberates with the audit committee chairman and the risk management committee chairman, and then finally the risks are formulated and mitigated.
How does the audit committee?
Yeah.
How does the audit committee ensure arm's length transactions should we take an expert opinion from a third party? In fact, my experience I can share with you. Whenever the matter comes, etc., categorically we need to check up with the finance department as well as the taxation department in terms of the ordinary course of the business, also in terms of the arm's length business. We take a specific undertaking letter from them to safeguard the interest. Wherever the doubt, wherever they are not satisfied or something like that, one or two cases, we are actually gone to outside expert also to take an opinion, take up the arm's length transaction, etc. I would like to hear from both the panelists their practical views on this.
Sir, in our organization, we are taking certificate from the CFO of the company, who gives this certificate based on the examination of all the transactions. Plus, we are also taking certificate from the independent chartered accountants too. So both these certificates are placed before the audit committee.
I was just looking at some questions in the chat also, and I was trying to answer to this question. I think there was one question in the previous slide wherein somebody has mentioned that scrutiny and not approval by the audit committee. Scrutiny under Companies Act is interpreted as it has to go to the audit committee first. So that is how traditionally it was only Companies Act, and then LODR came in 2015. So that procedure companies continues to follow. So that is the part of the corporate governance under the 56 Act, followed by 13 Act. And then 2015, the regulations came. And now coming to this particular issue with regard to just, intercompany loans and investment, is there any limit or restrictions prescribed? So no limits and restrictions are prescribed. As far as related party transactions is concerned, RPT, the board in the first meeting, when they provide the approval for the this related party transactions, they provide the criteria, how the related party transactions has to be assessed. So one of the criteria which we also follow is that we take independent chartered accountant certificate, and on the quarterly basis, the statutory auditors verify all the related party transactions, and they give a quarterly reporting to the audit committee that as per the approval granted by the audit committee, these transactions have happened in this quarter, and it is an arm's length transaction in accordance with the parameters which has been fixed by the audit committee. Now the transactions, the type of transactions vary a lot. There are certain service-related transactions, certain product-related transactions, certain transactions are with regard to certain properties. So it has to be a different kind of interpretation to be done by the audit committee, and they have to put certain separate criteria. But one thing which goes in common is the review of all the RPTs as per the parameters set by the audit committee by a statutory auditor, which is not part of any of the regulations or the Companies Act, but that is for the purpose of this safeguarding the interest of the audit committee and the board at the large. So that is a protocol which many companies follow.
Further, it is the role of the audit committee to review the annual and quarterly financial statements an auditor's report along with the management, and in particular reference to matters required to be included in the director's responsibility statement, changes in the accounting policies and practices along with the reasons for such change, major accounting entries involving estimates based on the exercise of judgment by the management. Your audit committee plays an important role where any estimates are being made or future projections are being done by the management. Significant adjustments made in the financial statements. So even here the audit committee reviews whether any significant impact will be there in the financial statement of the company or any adverse impact of any adjustments that are required to be made. Compliance with listing and other legal requirements relating to financial statements and disclosure of any related party transactions.
Somebody is actually putting a question. Any real-time example of the major accounting entries involving estimate based on the exercise of the judgment?
Yeah. So this is like I had few examples in our company. When you do certain provisioning in the books of accounts and that provisioning is out of a litigation, then you obviously, the audit committee relies on external third-party judgment, and also they have to exercise their judgment as to whether the provisioning to be done or not. So this is where the role of the judgment and estimates of the audit committee comes into play. And the management had to specifically highlight to the audit committee, seek a proper approval through a resolution before putting in certain out of the business kind of exceptional business items.
Hema, your views?
Sir, recently in one of our companies, we have seen that we get the ruling in our favor. So the entries has been reversed. The provisions which were created were reversed and the profit were increased. However, it depends upon the judgment since the counterparty has gone to the Supreme Court. So in this case, I have seen that yes, the judgment, based on the judgment, the provisions were reversed.
Further, the audit committee also values the undertakings or assets of the listed entity wherever it is necessary. It evaluates the internal financial controls and risk management system. So here again, it plays an important role. If there is any issue with the internal controls, then the audit committee highlights it and makes sure that this is not faced by the organization. It reviews the performance of the statutory and internal auditors along with adequacy of internal control systems and internal audit function. It discusses with the internal auditors any significant findings and accordingly follows up whether any issue is there and it needs to be resolved. It reviews the functioning of whistleblower mechanism. Here again, an audit committee plays an important part wherein the whistleblower directly reports to the audit committee in case of any issue, and accordingly the action is necessary, action is taken by the audit committee. It approves the appointment of chief financial officer.
Again, here I got a question actually. When you say approval of the appointment of the chief financial officer, which is one of the senior position of the company, now the nomination remuneration committee has got the role to recommend their recommendations for the appointment of the senior people. Now the nomination remuneration committee, while it is recommending, the approval is lying with the audit committee. So both the committees do not, in conscience, do not agree. If the recommendations of the nomination committee is not acceptable to the audit committee, then what happens?
Procedure reinitiated.
Okay. Procedure reinitiated.
Yeah.
Because approval of both committees are required, sir. Simultaneously, both committees' approval will be required.
Yeah, because the nomination remuneration committee is actually not the approving authority, but the recommending authority. But whereas the audit committee is the approving authority. That is what I said.
Sir, you can go beyond and say, look, the board of directors, does not, approve it. Then again, as Sonali said, revisit, the whole thing.
Yeah.
Anyway, so.
No, that's what I said in the beginning. The overlapping of between the committees, sometime it may happen. but I do not know in reality, because I have not come across at least.
Since it is a KMP position, even though the information to the stock exchange also requires, right?
Yeah, that's
Yes.
right.
Sir, as there is overlapping of the committees, there are also overlapping of the members of the committees. So even the person who is a member of an audit committee is a part of NRC. So accordingly, he is a part of both the committees.
Yeah, that is right. You are right.
Yeah. It is very likely, Alifya, you said it rightly. Yeah.
Yes,
So KMP board approval will be required, sir. So anyhow, NRC approval would also be required by the board.
NRC recommends, then goes to the audit committee and then to the board.
Yeah, right. That is the way it is. Yeah.
Further,
Okay, go ahead.
the audit
Go ahead.
The audit committee reviews the findings of any internal investigations by the auditors. It reviews the utilization of loans and advances or any investments made by the company in its subsidiary, which exceeds 100 crores or 10% of the asset size of the subsidiary. Any investments existing as on date and coming into force of this provision. It considers and comments on the rationale, cost benefits, and impacts of schemes involving merger, demerger of the listed entity. So here again, an audit committee plays an important role in the restructuring of the organization, where it takes into account whether the same would be beneficial to the entity or not. Further, LODR also provides the following as the mandatory reviewed by the audit committee. They are management discussion and analysis of the financial condition and results of the operation of the entity, management letters and letters of internal control weaknesses issued by statutory auditors. So again, any internal control being highlighted by the statutory auditor is always reviewed by the audit committee, and accordingly it suggests measures so that the said weakness is removed. Internal audit reports relating to internal control weaknesses, the appointment, removal, terms of remuneration of the chief internal auditor is also reviewed by the audit committee, and the statement of deviations. So this statement of deviations is again approved by the audit committee every quarter and submitted to the exchanges regarding the utilization of funds and any deviation. It also reviews the report by the monitoring agency, and accordingly any deviation from the objects of utilization of the funds is reported to the exchange. Audit committee and insider trading regulations. Again, the code of conduct for listed entities to regulate, monitor, and report trading by designated person provides that the compliance officer of the listed entity is required to report to the chairman of the audit committee at least once in a financial year. So here the compliance officer regarding the insider trading mechanism which is present in the organization, he has to prepare a report and accordingly submit it to the audit committee. It also reviews the compliance with the insider regulations at regular intervals. So that may be quarterly review of the insider regulations present in the organization. The structured digital database, SDD, is supervised by the audit committee and compliance officer, and they in turn report to the board. So any more light you want to throw on this insider trading regulations, Sonali? The role of the audit committee?
Audit committee actually is vested with a lot of responsibilities under the insider trading regulations. Earlier, it was the compliance officer who had been vested with most of the responsibility under the PIT regulations. Going forward, after the 2020 amendment, now the audit committee is actually responsible to oversee the compliances under insider trading regulations. We, as a listed entity, what we do is on quarterly basis, we update the audit committee on what all compliances has been done during the quarter, trading window closure, any non-compliance has been observed from any of the insiders, what all trades in the securities of the companies have happened. So a comprehensive report goes to the audit committee. Although their responsibility is reviewing only once in a year, but reviewing once in a year would not give justice to their roles and responsibilities, what is provided under law. So we follow on quarterly basis. Many companies do it on 6 monthly. Some of them do on yearly basis also. So this way, this becomes actually another additional agenda item in the audit committee every time.
We were doing it actually quarterly basis.
Yeah.
Somebody is asking a question, is it a must for the CFO to be a qualified chartered accountant? Again, we go back to the financially literate, what we discussed on the audit committee. If we actually go by the Act it does not prescribe any qualification at all for the appointment of the CFO. Because even if we go in the Companies Act also, even LODR regulation also, even if we say, I think 134, if I'm not mistaken, it also says CFO is to be appointed, that's all, and he is required to sign the financial statement, etc., and other thing and all. And he has got the responsibility to oversee the financial statement. That's what it said. Nowhere the qualification is mentioned. But as we discussed in the beginning, the person who is heading the financial functions need necessarily to be a very well literate person in the field. He should be an expert in the field. That is why if we look at it, most of the companies, almost 99% of the companies, I can actually put it, either he is a qualified chartered accountant or qualified MBA finance, etc. That is what in practice. Yeah.
But no, Sonali, I have a concern. Like if you put all those responsibility on the audit committee, okay. So like if I have to be a chairman of that committee as an independent director, no, my responsibilities are unlimited. I mean, the responsibility and probably the liability. I don't know whether tomorrow, if anything goes wrong in the statements and all, tomorrow the director say, look, it was the chairman of the audit committee should have taken, So whatever, he has shown, we have agreed and approved, So I don't know.
On the lighter side, we say that audit committee is the core and the heart of the organization. And the meetings of the audit committee runs for more than like double the time of the board meeting.
You are absolutely right, Sonali. In fact, our audit committee meeting used to be almost a full day, where the board meeting only half day.
Correct. Yes.
But one thing is there, the audit committee is, Sonali puts it in the beginning, is actually guided with the finance committee, which is set up in many of the companies, and also guided by the senior management. And to some extent, they also take a help of the statutory auditor, internal auditor as well. But the responsibility all said and done is actually great to the audit committee. That is there, I agree with you.
So when we go through the agenda of the audit committee, at the end of the quarter, there are almost 20-25 items which they need to approve and take care of.
Yeah, so, very right.
Looking at the agenda items only, we can say how difficult it is to be a part of an audit committee and approve all those transactions.
Yeah. Somebody is actually asking, is it actually practical to all the members of audit committee to review the accounts, RPT, loans, etc.? See, that is where I think what happens is in our secretarial standard also specifies all the documents need to be sent at least 7 days in advance. In fact, in our internally agreed, the KRA and the KPA parameters, although the law says 7 days advance, in our case, we have been told, I have been given a mandate when I was a company secretary, I need to send all the agenda documents with the supporting papers in full 10 working days before the meeting. That used to be the agenda actually, because the whole idea is to give a sufficient time for the people to go through the document, understand the things, prepared and come and put up the question, etc. In fact, I had also occasion, there are a lot of independent directors, they used to call us, seek additional information, seek additional thing. Not only that, even they go to the extent of asking, can you actually give me what sort of the approval is actually sought from us? Can you give me at least the draft resolution, what you are expected to pass in the meeting? To such an extent, people have actually questioned actually. Yeah, I seek both the panelists' view on this. It is quite interesting.
Yes, sir. The role of audit committee has grown manifold in recent past, coming that audit committee not only have to see the financial reporting aspect, but also now RPT has been added to it, then visual mechanism, insider, and plus now CEST to the some extent, like encumbrance disclosure has also to be placed before the audit committee. So no doubt the audit committee members, the regulator expect audit committee members to be very prudent, and of course they are backed by the certificates of the senior management, whom they in most cases relied upon, and the senior management also certifies on the basis of the scrutiny. So to some extent, means the role of audit committee members is very important, but yes, they are supported by the senior management of the company also, sir.
Yes.
Is it more practical for one member carry out the review and to discuss the findings with the other members?
Not seen that thing happening. The only issue has been that from the time the unpublished price sensitive information has become too important under LODR and the insider trading regulations, board members, the listed entities generally try to provide the information in the sealed envelopes of the annual report, etc., to the board members 4 or 5 days prior to the board meeting, and they seek their comments one-to-one. If the audit committee members discussed among themselves or the board member discussed amongst themselves, that is their choice and prerogative. But as a company, we don't show any initiative for them to come forward on a common platform and discuss prior to the audit committee and the board meeting.
Either a mandate audit committee member should be the member of the NRC. Understand it can be constituted with a totally different directors.
Yes, totally different independent member. But the
question is, you need to have more independent directors on the board.
Yeah, true.
That is the thing. If you are actually
you are increasing your board size.
Yeah, that's all. If you increase the board size, yes, this can be done. There is no problem at all. But the choice is yours. But who's interested in doing that? Correct. That is the problem now. In practical, if you comment, who's interested in doing that?
At least there would be overlapping of 1 or 2 members, if not all.
Yeah, that is there. Is a separate internal audit department is compulsory in case of the 5,000 crore listed company?
No.
I don't think so, because internal audit function, either it can be within the organization or it can be outsourced. That is what the requirement is there, I think.
And the CARO provides that there has to be internal control procedures in place. It doesn't talk about that the internal auditor should be 5,000 because it is driven from CARO. And what LODR suggests is that there has to be an internal auditor and the audit committee has to review the reporting and appointment of the internal auditor. Coming to in-house internal audit and outside, we have tried both. But the thing is that outside internal auditors have always been more effective compared to the in-house internal auditors. In-house internal auditors, there is again a reporting issue because on day-to-day basis, they have to report to the managing director, which is administrative reporting, functional reporting with the audit committee. They meet the audit committee like not more than 5 to 6 times in a year. So those challenges continues. So outside is always preferable from the practical standpoint.
I also agree with you because if the outside people are there, we can get, better practices, better things, their expertise, knowledge, etc. in moving with the other industries. We can have definitely a better thing. That is true, actually. There's one more question as put is there is a violation of the PIT. How could the quantum of the penalty be determined by the audit committee?
No, quantum of the penalty is determined by the code in Insider Trading Code of Conduct. Audit committee has to just monitor that the compliances under the PIT regulations are happening or not. Rather, it has been the responsibility of the compliance officer and the managing director as per the code to decide the penalties in most of the companies. But the monitoring of the same rests with the audit committee. So it has a supervision role rather, not an executive role in this.
I don't know. There is another question which is there actually. Since these days, all the presentation, including the internal audit and statutory presentation and board presentations are being presented directly to the audit committee meeting. So how practically is it possible for the audit committee to review all of them thoroughly unless some are actually highlighted to them?
Audit committee generally takes their own decisions. If they want further insight, they ask the management, they ask the internal auditors, they decide as to how comfortable they are, the way the reporting of the financials are being done to them. And ultimately, it rests with the chairman of the audit committee who seeks the process right, that whether I need further information from the CFO or I need from internal auditors or I need a elaborated presentation. So it's various means and ways in which the audit committee tries to become comfortable in their shoes.
What is the
why the finance head is a part of the audit committee meetings also, so that they could explain the members regarding any major highlights being done.
Yeah, they are the attendees. Yes.
Yes.
What is the ideal for internal audit committee? No, internal audit committee. We are not discussing the internal audit committee. We are talking about the audit committee. I am not clear what is the mind in the reader.
Not having day-to-day access.
Ideal for internal audit, maybe.
I think they are saying that since external audit committee
is follows. Since the external audit agency is not having any day-to-day access. No, external audit need not have the day-to-day access because he goes through the various financial things, etc. Normally, what happens is whenever the external person is also there, any of the company nowadays the digital email, they are actually given a specific access to go through all the transactions which has happened. That is what they do actually. They go through each and everything and they come out with their solutions. They need not be on day-to-day in the organization or something like that. Can a company secretary be the whole-time employment be appointed as the internal auditor of the same company? Will there be a conflict of interest?
Internal auditor has to be independent. There will definitely be conflict of interest because as such, internal auditor role itself is challenging because till now it is very difficult to establish independence of in-house internal auditor. Because internal auditor that way has to report to the audit committee, but for day-to-day operations, how the administratively they will function, they have to report to somebody in the organization. So any reporting in the organization itself creates a question mark on the transparency and independency of the in-house internal auditor. If it is a compliance officer, there is not something that compliance officer cannot be internal auditor, but the thing is that independence and transparency cannot be maintained. It will be further more challenged. Yeah.
Theoretically, it is possible, but when it comes to the practicality, looking at the complexity, looking at the compliance requirement, etc., it is really impossible for a company secretary to function both the things, especially in the listed company and the larger company. That is one. And coming to my own personal experience, we also had an internal audit initially. People were not happy. Then we decided to outsource. But the question is, who will actually oversee the outside internal audit functions and other thing and all? That time the board discussed elaborately. Then ultimately they decided the company secretary will be the company secretary, also the head of the internal audit, who is responsible to oversee the things. That is what it is decided. I was actually holding the position that way, but the thing is, I was not involved in the internal audit. I was actually used to prepare what is the terms of reference for the internal audited areas to be the internal audited, etc. and other things. I used to monitor, I used to facilitate, but the reporting is always internal auditor to directly to the audit committee.
Audit committee, yes.
I was only the coordinating person to see the internal audit function goes well laid out, etc. Of course, with the discussion with the audit committee members, that is what I was doing to come to the practical experience. The support of the audit committee of internal audit department, especially in-house, will become effective. That's what somebody is saying. What is the thought?
In-house has only challenges of independence and transparency. They come under the influence of the various user departments, and as far as external is concerned, they follow set protocols. This has been
as you rightly say, internally, there is something always, if I report this, what will happen? If I don't report this, what will happen? And all this sort of things will be there because of the employing contractual obligations. Yeah.
Yeah. This is the right thing, the contractual obligation of the employee.
Correct.
Yeah. This is the crux of the thing. So why we should not have in-house.
Yeah. In spite of being a FCA, CASA and qualified MCA directorship, the expectations of the independent auditor sky high. a lot of responsibility. Better to avoid the director, I guess. I won't say anything on that. For more better compliance control in all the parameters like financial compliance, in those internal audit is there more effective. Yeah, internal audit is required. In fact, the law made it very compulsory for the internal audit for certain category of the companies. The appointment of the internal auditor is actually a mandatory. And in fact, statutory auditor is governed many times by the internal auditor, even by choosing the audit program itself, how much they have to rely upon, how much checks they have to do, and all the things decided by the external auditor, even after taking the internal auditors. Yeah, go ahead, Alifya. I think we are still in the second committee. We are already 12:20.
Yes.
We need a lot of things to go. Please.
So Regulation 19 of the SEBI LODR provides for the constitution of another important committee, that is Nomination and Remuneration Committee. It shall consist of 3 directors, and all the directors of the committee needs to be non-executive directors. 2/3 of the directors of this committee shall be independent. The chairperson of the committee shall be an independent director. Further, it also provides that the chairperson of the listed company entity, whether he is executive or non-executive, can be a member of an NRC, but he shall not be a chairman of the committee. The chairperson shall be present at the annual general meeting to answer the queries of the shareholders. Further, the regulation provides that either 2 members or 1/3 of the members of the committee, whichever is greater, shall constitute the quorum, including at least 1 independent director to be present at the meeting. And the NRC shall meet at least once in a year. Again, NRC, the role of the NRC is very wide and very important for any listed entity. And meeting once in a year will not be possible, as a number of responsibilities and decision-making powers is there with the NRC.
What do you think, Sonali? Is the NRC committee meets only once, or it is more than once, twice, thrice? So what is the experience?
Generally more than once, generally, because the review of the performance of the senior leadership, when you have quarterly payouts defined, it has to be more than once. Yeah.
Further, Part D of Schedule 2 of SEBI LODR provides for the role of the Nomination and Remuneration Committee, which provides that it formulates the criteria for determining the qualifications, positive attributes, and independence of a director. It also recommends to the Board of Directors the policy relating to the remuneration of directors, KMPs, and other employees. Every appointment of the independent director is properly scrutinized by the committee by preparing a description of the role and capabilities of that director. It evaluates the performance of independent directors and the Board of Directors. So NRC plays an important role in identifying correct people are on the board of the company, so that the company gains advantage to the expertise which it brings to the board. It also identifies the persons who are qualified to become directors and who may be appointed in the senior management of the company. It also decides whether to extend or continue the term of appointment of the independent director on the basis of the report of the performance evaluation. So again, it plays an important role in the appointment and in the continuation of the term of the independent director or any other director in the board. So even if a director of a company is retiring by rotation, it is placed before the NRC whether he is eligible for reappointment. It also recommends to the board remuneration in whatever form that is payable to the senior management. So again, it defines a qualitative and quantitative criteria on the basis of which the directors, executive directors, and the senior management of the entity are remunerated accordingly, properly given incentives and bonus or any ESOPs, whatever is being granted in the company. So, any more insights on the role of the NRC, Hema?
For independent director, the NRC also looks for the evaluate the skills, experience available on the board. On the basis of that, the NRC prepares the description of role and responsibility of the independent directors, and then propose the right candidate who is suitable for the role. So NRC basically is the entry gate for the boardroom as well as for the senior management personnel in the company. So it's basically the right person at the right place is decided by the NRC. NRC is the first step toward this. Further, to retain and motivate the employees, senior management, as well as director, NRC prepares the remuneration structures and recommends the same to the board. Third thing is that coming to the renewal of the term of the independent director, the NRC reviews the performance of the independent director and recommends the continuation of independent director. So here, basically the human aspect has been entrusted with the NRC committee, which sees that the right person is there sitting on the board or on the senior management, then sees that that person is fully motivated through the remuneration or other forms of the package or other things, and then whether to continue with that same set of person or not. So overall, the human aspect of the top management is looked after by the NRC committee.
Further, I think they also play an important role in the appointment of any individual on the office or place of profit, where they have to justify how a related party is being appointed to that place and accordingly remunerated. So even there it plays an important role. Regulation 20 of SEBI LODR provides for the constitution of stakeholders relationship committee. So
one
again,
question is there on NRC. Okay. In case of the appointment of the KMPs, what is the stage when a MRC committee be involved? Or is it right from the screening, or it only stamps a choice of the management?
Interesting question. So actually, for the KMP positions, it goes from the screening. The NRC actually meets the KMPs, they meet the senior leadership, and then the appointment happens. What the management does is only if NRC says, recommend certain positions to the NRC. So ultimately, NRC decides the protocol. They may also think that we want an executive search agency. We want somebody from outside to come and recommend certain profiles to us, or they may delegate to the management. So it is how the NRC would set the stage right. And screening, in 90% cases, it is done by NRC. Not provided in law anywhere, but this is how the NRC can ensure that the appointment is recommended in the right perspective to the board of directors.
I also would presume by and large in the listed companies and the larger companies and all the things, this is what it is happening. But all said and done, coming to the unlisted public companies, which are more or less run by promoter and family people, etc., and all the things where the independent director itself is actually questionable, because statutorily independent director is there. That is why they are actually there. Otherwise, they are not involved. They don't know any business, etc. That sort of the thinking is actually there. In some of the companies, I believe it is only, sort of a thing what the participant says. Okay, because record the approval from here, so you people give your approval, we will take it. That is happening in some of the unlisted companies like this, promoter driven and family driven, I think so.
Yeah.
An MD is to be appointed by the holding company for its subsidiary as per the association and article of the company. Which authorities holding company will appoint the MD, or whether it will be required considered by NRC in the holding company?
First of all, NRC would not, according to me, NRC would not play any role here, because this is something between the holding and the subsidiary company and not governed by the LODR. Appointment can be made by the holding company if it is provided so, but definitely the board of the subsidiary should also consider.
Somebody is actually putting only an auditor will understand another auditor and the accounting standard. Yeah. So one person from the auditing profession is therefore necessary to have in the audit committee.
Yes, so the audit committee generally, the board decides the protocol of the composition of the audit committee. So every industry and every board, they have a different mindset. They decide the skill metrics, and then they decide from which metrics is more important in their particular industry. Is it the technical expertise, or it is the financial or accounting or auditing? So accordingly, they nominate the members from the entire panel to the audit committee. What is right?
Can I speak?
Yeah, sure.
Yeah. I asked a question that in case of a holding company, it is required to appoint a MD of its subsidiary company as per the agreement, promoters agreement, as well as per the articles of the subsidiary company. Now, MD is to be appointed by the holding company, and that appointment is binding on the subsidiary company. Now, the question is, who will appoint such MD of the subsidiary company in the holding company? Which authority will appoint? Whether this will require consideration of the NRC of the holding company, or the CMD will appoint, or the board will appoint? Who will appoint?
According to me, you should be governed only by your articles and internal agreements between the holding and the subsidiary.
No, that agreement says that the holding company will appoint.
Yeah. So holding
company will be appointed by holding company. But who will appoint? When it says it will be appointed by holding company,
so
authority will appoint in the
so then it has to be board. Because if it is not delegated authority to MD, then
it is nowhere written that such appointment is to be made by the board. It is nowhere in the authority of the board as such.
In the normal context, if it is not a delegated authority, the decisions of the board is binding on the organization. But when I think you have to go into the detail of your own case, that whether it is the shareholders agreement which is there in place, what does the shareholder agreement say? Was it approved by the board? When it was approved by the board, what kind of authority was delegated by the board of directors to take the necessary action as per the agreement which has been approved? So I think your case specific documents you have to review.
Actually, no such specific thing is given. The only consideration from my point of view is that because you are appointing a very senior person who is a board member of a subsidiary, and for appointment of any senior functionary, the matters require consideration of the NRC. So why this matter should not be considered by NRC, and then the board should approve it?
NRC is actually only for the particular company, not for the subsidiary company. So that is very clear. If any appointment is actually required to be done in the board of the holding company, then NRC comes into the picture. NRC cannot actually step out their limits beyond the company. Because when you talk about the subsidiary company is a separate entity on which NRC members are neither the member nor connected with them. So in this case, that cannot be the case, because probably when you say there is nothing in there, it is only the AOA, the holding company will appear. Then when you say holding company is actually governed by the board of directors. So if the board takes the decision, that is the end of it.
Sir, one more point. Just one more point to add. Just one more point to add. If the officer belongs to the holding company, the officer to be appointed on the subsidiary company is an officer of the holding company. In that case also, do you think that NRC's recommendation is not required?
No, not required.
No, not at all. Not at all.
Because they don't have the powers to exercise.
Because NRC cannot exercise any power in respect of the subsidiary company, because the appointment is going to be in the subsidiary company. NRC may no way connected with the subsidiary company.
Sir, this is fine. One more question pertaining to the audit committee. Can I ask a question relating to audit committee?
Yeah.
If you permit.
Yes.
Yeah. My question is that Companies Act says the persons who are the chairman and members of the audit.
Your voice is not visible, some problem.
Yeah. As per the Companies Act and as per the SEBI LODR, the persons who are chairman and members of the audit committee, they should be able to read and understand the financial statements. So how you interpret it? Who is capable of reading it and who is not capable?
I don't know whether you are there in the initial or not. This we actually talked in the initial stages. Law says it's the understanding and other thing, and practically we need an expert because even Sonali actually shared her thought. When we give her a chance, will you go by just a BCom graduate who knows the financial literacy, whether we will go by a MBA qualified person? Or the immediate action was we will go by the MBA person. We need an expert to understand the thing. That's what it is. It goes much beyond.
So financial literate should be in the context of your business, actually. It is not a generalist financial literate. Yeah.
One more thing is there here. The recent observation of the NFRA may be noted. I think he's sharing the thought, I think so, that the members of the audit committee need to ask the right questions in the given context before approving the item. This indirectly speaks of the financial expertise and again, appreciation-wise, application-wise, the audit committee members, etc. Yeah, that is always there because the independent director, non-executive director are required to inquire, find out, check before they take a decision. That is always the case. That is what is highlighted here, I believe. Yeah, go ahead, Alifya. I think we are running out of time. I think we need to cover 2 more committees, I think. Yeah.
Yes, sir. So Regulation 20 of the SEBI LODR regulation provides for the constitution of Stakeholders Committee. SRC is formed to look into various aspects of the interest of the shareholders, debenture holders, and other security holders. So though the nomenclature of the committee states stakeholders, it is primarily for the benefit of shareholders, debenture holders, and security holders of a company. The chairperson of the SRC shall be a non-executive director, and he shall be present at the annual general meeting to answer the queries. At least 3 directors, with at least 1 being an independent director, should be present, should be the members of the committee. The committee shall meet at least once a year. So again, here, though the regulations provide for the meeting of the committee only once a year, SRC may be required to meet more than that to address the grievances of the shareholders or any difficulties in the process of their claims. So accordingly, it needs to meet at regular intervals. Part D of Schedule 2 of LODR regulation provides for the role of the SRC. So SRC resolves the grievances of the security holders having complaints relating to transfer or transmission of shares, non-receipt of annual report, or non-receipt of dividends declared. So here again, when the share department of the company is being entrusted to an outside RTA, then it is the duty of the SRC to have proper reporting from the RTA saying how they have handled the request which they may have received during the quarter or during a half-year period, and accordingly address any grievances that may be pending. Review of adherence to the service standards adopted in respect of various services being rendered by the RTA. Review of measures taken for effective exercise of voting rights by the shareholders. And it also reviews the measures and takes initiatives for reducing the quantum of unclaimed dividends, ensuring timely receipt of dividend warrants, etc. by the shareholders of the company. So here, if for the SRC committee also, the company secretary of the company plays an important role, where it makes available all the necessary reports that may be required by the members of the committee at regular intervals. Regulation 21 of LODR regulation provides for the constitution of the Risk Management Committee. So the formation of Risk Management Committee is applicable to top 1,000 listed entities, and the same is determined on the basis of market capitalization as at the end of the immediately preceding financial year. Further, it is also applicable to a high-value debt-listed entity. RMC needs minimum of 3 members, with majority of them being members of the board of directors, including at least 1 independent director. Further, this is the only committee which provides for the inclusion of senior executives of the listed entity as members of the committee. However, it also provides that the chairperson of the RMC shall be a member of the board of directors. The quorum of the RMC shall be either 2 members or 1/3 of the members of the committee, whichever is higher, including at least 1 member of the board of directors who shall be present. The committee shall meet at least twice a year, and it shall be conducted in such a manner that on a continuous basis, not more than 180 days shall elapse between any 2 consecutive meetings. Here again, though the frequency has been provided by the LODR to be only 2 meetings in an annual year, RNC plays a very important role in respect of the risk decisions that it may have to take. So the frequency may be more regarding to the meetings. The board of directors shall define the roles and responsibilities of the RMC and also delegate monitoring and reviewing of the risk management plan to the committee, particularly covering cyber security. So now the risks pertaining are not only to external and physical risks that or any internal risks that it may be facing. The cyber security risk is an important risk which any entity in today's time face.
In fact, the risk management committee in our company where I was working used to meet every quarterly. Not only every quarterly, even sometimes we used to have more than 4 meetings, 6 meetings, 7 meetings. And each time when the board meets, the risk management committee also meets and appraise the things, and the status is actually put up to the board. That used to be the practice. Because risk is one thing which they have to, on an ongoing basis, regularly, they have to monitor, they have to work it out. So this cannot be twice in a year or something like that. It will be more frequent. Most of the companies, it is like that, I think so. Sonali, your expertise.
Yeah, I agree with you, Balaji. It is 100% like this only. It's on quarterly basis. So what happens is the risk management committee prepares a report for the board of directors, and also the risk register of the organization is quite exhaustive. So you have various risks. Many risks travel from low, medium to high at different frequencies in a year. So the high risk has to mandatorily go to the board of directors. This is how the policy prescribes generally. And when you keep on evaluating on regular basis, you are actually mitigating the risk in the right manner, which in any ways, if it goes only twice in a year, it will not be actually evaluated in the right manner. Risk, like we have seen COVID as a risk to the companies, which if we would have waited for this 6 monthly meeting, then it would have created a disaster for the organizations. So it has to be as frequent as possible, depending upon the risk appetite, whether how many risks are following in the high risk category and medium ones.
In fact, as I was heading the internal audit function, coordinating the thing, one of the mandate I used to give to the internal auditor is whenever they come across any irregularities, non-compliance, etc., he used to exercise his risk matrix. He has to give the risk in the scale of 1 to 5. Highest risk, medium risk, low risk, negligible risk. He has to rate and give the risk. That is the way we used to analyze, and these things directly used to go to the audit committee. And if there is alarming things, etc., and it is escalated further to the board. Yeah. And one more thing is asking here, in some of the boards, the NRC also conduct the succession planning and the talent pipeline building in the top level that is conducted annually to keep internal talent getting ready for the KMP. Normally, in many organizations, the second line person is actually prepared really if he goes what. That's top care. Much will depend upon what is the company's policy actually, whether they wait for the position to be vacant start or whether they actually keep ready the succession. That's all much will depends upon the company's policy. And one more thing is there, coming to the KMPs, normally by and large in most of the companies, the notice period for separation is generally 3 months. Because earlier it should be 1 month, but when it comes to the KMP, etc., I think it is actually 3 months period. With the 3 months period, it means then they have the enough time to prepare. By the time the position gets vacated, they filled up. That's what I think so.
Yeah, succession planning has become the main terms of reference for the NRC, and it goes to the board and the NRC on every yearly basis. Now, when we plan the succession, as you rightly mentioned, it can be short-term and long-term, but generally companies present both the scenarios. In short-term, who would be the successor, and long-term, who would be the successor. And short-term intermediary charge can be given to anybody, and subsequently, if the company wants to build somebody for the long term, then the talent pipeline comes into play. Otherwise, it goes to the outside hiring. Yeah.
Presently, KMP joining time is 3 months, as there needs to be given the advance notice to the existing company when need to intimate the stock. When we need to intimate the stock exchange of the KMP's appointment, date of issue of the appointment letter or the date of joining.
So mostly companies are informing at the time of joining. Till then, that will be UPSI. That information will be UPSI. Because anytime before resignation, things can turn around and the person may not leave or may not join.
If the MD of the subsidiary company is appointed by a holding company, then POEM, that is place of effective management, will be attracted and the tax guys will be come running.
Yeah, that depends whether subsidiary is in India or overseas. So it is very subjective to that organization.
Yeah, very right. Yeah, go ahead, Alifya.
Yes. So the powers of the RMC is to seek information from any employee of the entity, obtain outside legal or other professional advice, and secure attendance of outsiders with relevant expertise if it considers necessary. Since RMC has an important function to averse the risk that may be faced by the entity, then it is possible that they may require outside help so that the risk is minimized and mitigated. Part D of Schedule 2 of LODR provides for the role of the Risk Management Committee. So the important role of the Risk Management Committee is to formulate the risk management policy, which shall include a proper framework where any internal and external risk that may be faced by an organization to a particular industry which it may belong to is properly identified and accordingly taken care of. It also devises measures for mitigation of risk or minimization of risk by putting in place proper processes and systems of internal control. It also takes into consideration the business continuity plan. So as if the company is having presence internationally, then there are many situations, for example, a war-like situation which is going on at present, which may threaten the existence of its business. So in that situation, the RMC and the risk management policy plays an important role to ensure that the business of the company is not affected adversely. The role of the risk management committee is also to ensure the appropriate methods, processes, and systems are in place to monitor and evaluate the risk. It also monitors and oversees the implementation of the risk management policy, including evaluating the adequacy of the system. It reviews the risk management policy, and it shall be done at least once in 2 years. So though the regulation provides for once in 2 years, many times the review of the policy may be required so to put into place new measures and new framework for identification of risk. To keep the board of directors informed about the nature and content of its discussions and recommendations and actions to be taken. Another important role is the appointment, removal, and terms of remuneration of Chief Risk Officer, and it shall be reviewed by the Risk Management Committee. So even appointment of Chief Risk Officer plays an important role. The Risk Management Committee shall also coordinate its activities with other committees wherever there is an overlap of activities. So the decision-making of RMC, if it pertains to any decisions of the Audit Committee or NRC, then it shall coordinate accordingly and submit its report to the board along with the other committee with which its function is overlapping.
Somebody is putting a question, what is a risk profiting and how it is done?
Can you ask them to unmute and explain?
Yeah, Rahul, are you there? Can you speak, Rahul? Can you unmute and talk? Oh, sorry, he is correcting. Not risk profiling. Rahul, can we hear from you? Can you talk? Please unmute and talk to us.
Maybe, sir, he is referring to what all risk profiling, maybe the identification of risk, what all risks are there with the company, profiling them on the basis of medium, low, and high, and how to mitigate it. This is what I understand from his question.
I don't know,
It
because
can be,
he has actually put actually
geo,
what is, yeah.
It may be, sir, geopolitical risk. It may be the business risk, marketing risk. So maybe the profiling he is saying maybe of that way, but I'm not sure this is what he is asking for.
It seems like, yeah, Hema, it seems like he's asking for a risk register. What profiling means, a register seems so. Yeah.
And there is one more question, sir. Can another view be taken while calculating 180 days gap? Suppose if the meeting has happened in March, can we have another meeting in November? So I don't think so, because 180 days gap need to be seen. It's 2 meetings in a year, 180 days gap also need to be seen. So in this case, November won't work.
I think when you talk about 180 days gap, means it is 2 successive meetings. That is what
Yes,
I think. Sir. Yeah. So it won't work. You're right, excellent. Yeah. Go ahead, Alifya.
Section 134(3)(n) of the Companies Act provides proper disclosures in the board's report, whereby the management needs to disclose a statement indicating development and implementation of a risk management policy, including identification of elements of risk, which in the opinion of the board may threaten the existence of the company. So even here, the RMC needs to develop a proper statement and accordingly help the board to properly intimate the shareholders of the company. Schedule 5 of SEBI LODR regulations also provides proper disclosures to be made in the annual report of a company, whereby audit in respect of all the 4 committees. So description of the terms of reference of each of the committees along with their composition, name of the members and the chairperson. Further, how many meetings of the audit committee, NRC, SRC and RMC has been done during the year. And accordingly, all these entire information is required to be submitted to the shareholders. So even they are aware of how the decision-making process is being done at the organization. In particular for SRC committee, the details pertaining to the number of shareholders complaint received during the financial year, along with the complaints which have not been solved at the end of the year, are also required to be disclosed in the annual report. The Secretarial Standards 1 on the meetings of the Board of Directors are also applicable to the meetings of the Audit Committee, NRC and SRC committees, as these committees are mandatorily required to be constituted by the board of the listed entity. So Secretarial Standards 1 needs to be followed with respect to sending of notices, agenda, notes to agenda, along with the draft minutes and signed minutes of the committee meetings also. So company secretary has to take care that all these secretarial standards are being followed, not only for the board meetings, but also for all the 3 committee meetings. Further, it should also be noted that though the secretarial standards are followed for these committees, there are a number of committees which are voluntarily formed by a listed entity. And as a good governance practice, SS1 shall be followed also in respect of those committees, though it is not mandated by the law. Yes.
Excellent, Alifya. You have given a very, very wonderful presentations in a very, very capsule form, putting everything together and nicely. And your flow of language also very good. My appreciation to you. As far as the question is concerned, let me see. I don't think there is any question there except the last one when we are talking about the profiling. That person did not call us actually. I don't think any other questions are left out in the chat box. I think we answered all the queries. Still, if the participants have queries, they can still answer. That is one thing. There are a lot of appreciations are actually coming for this program. Everybody is thanking for conducting the good program, etc. and other thing and all, which is there. Yeah, your closing words, Sonali.
Thank you very much, first of all, to all of you. Very interactive session. And it's actually a good platform of Mehta and Mehta to discuss informally. This is the right word I would like to put. Because webinars are generally a set pattern. So good initiative by the firm. And also, I would like to thank Hema, Alifya, Mr. Balakrishnan, Mr. Mehta, everyone for their immense contribution. And to the entire audience here today. You have been a good audience. Yeah.
In fact, at this time also, we can see over 100 people are present. And normally in any webinar, in the end of the session, when it comes, the figure reduced to the minimum, which is not the case here. That shows the importance of this particular topic. And not only that, it is important the sharing of the knowledge with the expertise of people like you who are actually in the field. I think I take the opportunity of thanking you, all the panelists, and especially to Mehta for organizing this program, Atul Mehta. And really, it was a very, very educative session to all of us and very interactive sessions. And we could complete in timely. And of course, my special thanks to Alifya for the very good presentation she has actually made, putting the things together. And one more thing I would also like to mention at this particular time here, it is not only the LODR coming into the picture, even the regulators, they are also going into the various non-compliance issue across the country, let it be ROC Bangalore, ROC Bombay, ROC Ahmedabad, ROC Delhi, they are looking about the non-compliances. If the audit committee or nomination remuneration committee is not constituted for a period, etc., nothing else, they are taking. Company secretaries are invariably held as a compliance officer. The penalties levied to the company secretaries, that too also very hefty penalties, which is actually levied. Once the levy of the penalty happens, it has to be paid from the own pocket. No company is going to reimburse. Please keep that in mind. So company secretary has got a very responsible role to play, ensuring the compliances absolutely. And Alifya actually brought out the SS1 secretarial standard, SS1 and SS2 secretarial standard. Coupled with the SS1 and SS2, there is a exemplary guidance note has been issued by the institute, which I think everybody should go through it, which gives the right examples and other things and all, giving the things which will be very useful to all of us. I think we'll keep meeting in the sessions and enlightening. Atul, your last words. That's all. Then we can close.
As usual, thank you all panelists, particularly Sonali in a very short term, she immediately accepted. Thank you once again. And of course, Hema, for your wonderful, suggestions and all. So thank you all, Balaji, you are always, you are our own person. So, he's also very passionately, takes any topic, you discuss any topic, he has those, background and knowledge and, so thank you very much, sir. And Alifya, thank you for the wonderful presentation, sir. And yes, Sonali, I'll bother you again because, I mean, anytime you are my last resort anytime, but otherwise also you are always there to support Mehta and Mehta. So thank you, Emma, once again. And probably we are going to have another part also 4. Alifya, what is that part 4? We are going to take it up next Saturday.
Sir, it is about the audit.
Audit, okay. Again, okay.
Yeah.
So, okay, that's going to be more
Regulation
interesting.
24.
Achha, Regulation 24. So thank you once again. Thank you, Mr. Bala. Thank you, Hema. Thank you, Sonali. Thanks so much, for your sharing your knowledge. And this is the platform where, we ask people to share their knowledge. Thank you. Thank you.
Thank you, everyone. Thank you.
Thanks a lot to one and all. Have a good weekend.
Thank you.
Thank you.
Meet in
Thank you,
another
everyone.
session.
Bye-bye.
Thank you to all.